Hello everyone, it's Friday, November 28. Today we'll analyze the charts of the euro and the British pound to identify potential market trends. The euro experienced a decline in early trading yesterday, but rebounded slightly later in the day, supported by the release of the minutes from the European Central Bank's latest monetary policy meeting. The document indicated that ECB policymakers believe the current borrowing rate is insufficient to address potential economic headwinds. Additionally, officials expect inflation to remain stable around the ECB's target level of 2%. With the energy crisis winding down, the economy is unlikely to experience increased pressure from rising energy prices. Overall, even with the current interest rates, the ECB remains confident in its battle against inflation and views the ongoing economic growth as steady. Yesterday, the US market was closed for Thanksgiving, and the macroeconomic calendar reflected a lack of news releases from the United States. Today, the US trading session will be shortened, with no report scheduled, so market participants will primarily focus on the European session. Historically, we should not anticipate sharp market movements, particularly in the first half of the day. Turning to today's macroeconomic calendar, we have a wealth of statistics from Germany. Retail sales are projected to rise by 0.2% in October, while the number of unexpected individuals is expected to increase by 6,000 and keeping the unemployment rate steady at 6.3%. Traders may also take note of various reports from Italy and France, including consumer price and GDP growth data. While these statistics are significant, they are unlikely to have a strong impact on market sentiment, unless the figures substantially exceeded or fall short of market expectations, which could lead to increased volatility. What is more, Bundesbank President Joachim Nagel is scheduled to speak today, potentially offering insights into the current monetary situation. However, it is quite evident that the ECB is not in a rush to cut interest rates and will most likely keep them unchanged at this December meeting. This sentiment clearly acts as a support factor for the European currency. Now, let's turn our attention to technical analysis. The 1-hour EUR/USD chart indicates that the false breakout at 1591 could trigger a sell signal, potentially dragging the price down to 1571. A breakout below this level could lead the euro further down to 1.1549. At this level, I recommend going long on a rebound, targeting a move 20-25 pips. Long entries could be set at 1.1571 on a false breakout, or after bulls regain control of 1591. A breakout and consolidation above this mark would allow the euro to rise to 1613 and probably pave the way for a continued rally to 1635. At this level, it would be prudent to consider short positions on a rebound, anticipating an intraday correction of 20-25 pips. In the event of muted selling activity at 1591, it would be wiser to defer short positions until the euro reaches 1613. However, I anticipate the market volatility will remain about 15-20 pips, with the euro-dollar pair likely trading around 1591 throughout the day. Therefore, significant price fluctuations should not be expected. Regarding the British pound, it appears to have stabilized following the assessment of the government's newly unveiled budget, with sterling rebounded after a brief correction. Given current conditions, the pound's volatility is likely to remain muted today. A slight rise followed by a false breakout at 32.52 could generate a sell signal, potentially bringing the pair back down to 32.30. The most distant target for sellers would be 32.11, where they might see buyers stepping in. A false breakout at this level would present a buying opportunity with the potential for a return to 32.30. The key target for bulls remains at 32.52. If they fall to regain control of 32.11, long positions could be considered at 31.85 on a rebound, targeting intraday correction of 20-25 pips. The same strategy applies to the 32.52 level as well. If buying activity is subdued at this level, it would be wise to consider short positions on the rebound at 1.3279, aiming for a move of 25-30 bips. Wishing everyone the best of luck. Have a great weekend.